We are here in Pretoria at the conclusion of the 105th annual general meeting of the South African Reserve Bank, taking place against the backdrop of tariffs. We know businesses here at home are scrambling to make sense then of what these tariffs now mean for South African exporters going forward. Reserve Bank Governor Lesetja Kganyago addressing then those tariff concerns in his address, as well as projections for growth in South Africa. But just to get a sense then of what exactly is the South African Reserve Bank's role in a time like this, I'm going to turn now to my guest, CEO at FirstRand, Mary Vilakazi. Mary, a very good day to you. Thank you so much for joining us today. As I mentioned in my introduction, at the annual general meeting then of the SARB, talk to us about the SARB's role then as we face these economic headwinds faced with tariffs and projections of low growth.
Thank you very much for having me. I guess when we celebrate the SARB's 105th year of existence, we celebrate and I think an institution that has global respect. I think the credibility in the work that they've done, their excellence and leadership that they play hugely in the environment. I think that is really a special moment for the SARB and for South Africa, for us to have institutions that we say, they do their best, they fulfill the constitutional mandate, and in turn helps the real economy. So how does that practically play out? What the SARB concerns themselves with is inflation. I think that's been one that's been quite topical. Why? I think it's about price stability. That's part of their mandate, and ensuring the financial system is secure. And if I go to the topic that you raised on tariffs, ultimately, what does the global fracturing result in? I think we've seen the fallouts in different places. The trade tariffs have implications for some businesses that have to look at other markets. Those adjustments take a long time, and I think our South African businesses are going to be under pressure. But, fortunately, no single customer that we've looked at only exported to the US. So obviously that rebalance will hurt. And particularly like the motor vehicle industry, you look and it's localized, it's in the Eastern Cape, so that impact is going to be bigger. But I think we have to remember that there is some sort of resilience in the companies actually that are facing these tariffs. And it's going to be a difficult readjustment. And the governor spoke about how GDP expectations have now been reduced as a result of that. But even that 1% outlook we are looking at, sometimes we have to remind ourselves that where South Africa comes from, because we had energy and logistic constraints, we were already not growing at a faster pace. So I don't think it's not a great outlook. If we were going closer to 2%, that would have been comforting. But I think that rebalance will take place. Another opportunity, I think for me, where the SARB plays a role is in building South Africa's own economic resilience. Because if we are resilient as a country, it means globally there can be headwinds, and we will be able to manage and navigate them better. So that's very important. And the SARB, I think where we commend their leadership is on recognizing that, as inflation has come down, now is a good time for South Africa to start anchoring inflation expectations lower, because at that lower inflation target, if we achieve it, and these things will take time. As you said, it's no promise. They've been at this 3 to 6% target range for a very long time. But as inflation has come down, it's around that 3%. So if we all start working towards that, the one big advantage, and if I have my retail banker hat on, is that, ultimately we start getting to a place where interest rates can look like they look in the developed markets. In the US, they haven't talked about interest rates being at 8.25%. Why? Because of where inflation expectations are. So this actually ultimately has a much longer term benefit. They could have said we're at 3, we're still comfortable with 4.5%, but it means South Africa then lives with a much lower interest rate in the long term. So anyway, this ultimately will be good for capital flows, because we've got a lot of infrastructure deficit. Transnet needs a lot of financial support. Where is it going to come from? From global capital markets. And for them, they need the price stability. And that is where the SARB plays really a key role in the real economy, in how they manage monetary policy and inflation, and what they expect us as the banks to do. Because one of their big expectations is that we must be well capitalized. Why? So that we can support economic growth when the opportunities are there. Lend to your manufacturers to rebuild again and do things that create work. So they play really a critical role in the real economy. They're not the government.